Hello everyone, this is Mohammad Akif with Akif CPA, and today we'll be discussing how to handle your past bookkeeping mistakes, or how to look at your financials and fix your bookkeeping errors, your accounting errors. So we'll be discussing a lot of the cleanup of the bookkeeping and accounting side, right? What are the problems that we see? What are the solutions that you can use? So we'll be talking about, why this is happening, how you can fix it, and then we'll walk through certain images in terms of what I'm looking at, where are the problems, and solutions to those problems, right? Clean up in a proper way, understanding why there's an issue, and then fixing it in a proper way. So solution to fix it in a proper way, and so it doesn't happen again. Look, if you are a business who needs bookkeeping help, who needs cleanup help, it doesn't matter what software you're using, QuickBooks, Zero, you name it. We can help you. We can help you clean up one time where you can take it off from there. If you want monthly bookkeeping, we can help you with that too. Accounting services, we can help you with that too. So there are a lot of things that we can do. And then the services can be catered according to your needs. For example, hey Mohammed, we just want a quarterly review. Look at our books on quarterly basis. Tell us how we're doing. We can help you with that. You're saying, hey, we need a one-time cleanup of our books. We can come in, do a one-time cleanup, and then get you going on your way, right? Or you want simply, hey, take over accounting, and then of course we do it on timely basis. We make sure you get the reports, and then we make sure that we stay on top. And they say, hey, get this done for us. And then, of course, we can do that too. So email us, info@akifcpa.com, info@akifcpa.com. We can help you with your bookkeeping needs, with your accounting needs. Does not matter what software you're using, QuickBooks, Zero, even Excel. Whatever you're using, we can help you. We want to make sure that you understand numbers. We want to make sure that we can deliver you reports. We want to make sure that the money that you're trying to make, you can keep as much as home, right? Good bookkeeping and timely bookkeeping will save you taxes. Again, good and timely bookkeeping will save you taxes. It is important because this good timely bookkeeping gets you to on time, right? So gets you reports where you can see numbers to do tax planning, to make sure that you are ahead of the game, where you can save taxes, take more money home, right? Otherwise, we're always playing catch up. There's no way you can save as much as taxes, maybe some here and there. But when you're playing catch up, you have no room. People who do planning, who are on top of their books, who get things done on time in a good manner, in a timely manner, will always be ahead of their game. When it comes to financials, when it comes to reporting, when it comes to taxes. So without any further ado, I'm gonna start presenting. Again, if you have any questions, email us, info@akifcpa.com, and we can definitely help you. I'm going to share my screen so you can see what I'm seeing. We'll go through some of the things. We have divided this up into 4 sections. All right. So how to handle past bookkeeping errors, right? So how to look at what were the mistakes, look at the reports, see what we're looking at, and then solutions. So let's get into it. So we have divided up this whole session into 4 phases. The first phase is the fixes, which is technically immediate things that you need to fix right away. These are problems that needs to be looked at right away, fixed right away, because if you don't fix this, think of it as pillars. If you think your pillars are weak, your whole building will be weak, right? So if the pillars needs to be fixed, they need to be strong, so you can build upon it. So these are fixes that needs immediate attention. This is where the focus should be when you're fixing bookkeeping problems, cleanups. This is where the attention should be. Number 2 is how to keep on checking in terms of diagnostic and error identification. How do you know what is going on wrong, even if the pill is right, why things are happening in a certain way. And number 3 is making adjustments in terms of technical. If these adjustments, when I say is these are not on daily basis. This is a one-time adjustment, right? So these are not on daily basis. Excuse me. And control checks, right? What do you need to do in order to make sure that this does not happen again. Because if you keep on repeating the cycle, I mean, you're in the same game again, playing catch up, behind, things don't look right, numbers don't look right, and then what happens is you end up paying more taxes. Right? So good and timely bookkeeping saves you taxes. All right, so let's go on the phase one, which is the fixes, which is again problems that you need to be fixed right away. That's the key here. Problem that needs to be fixed right away. Okay, so mismatch, prior periods, and inaccurate financial reports. This is what we'll be looking at right now. What are we talking about? The problem is that past months balances don't match. I mean, they're off. That makes your reports unreliable. This is when you're starting off. Look at your bank statement. Look at your software, QuickBooks, Xero, you name it. And then when you start reconciliation, do the balances match? If the balances don't match, then we have a problem, right? If your AP, accounts payable, accounts receivable, your liabilities, your credit cards, I mean, all these balances don't match, then we have a problem. So this is what we're talking about. So what really happens, right? And so the goal is to restore accuracy and rebuild clean financial history. So this is the backbone. These are the pillars that I was talking about. Your backbone, your base, your slab, if those are not okay, then you cannot build anything upon it. I mean, a lot of people say, hey, you know what, we want to be fixed. We want things to be fixed moving forward. It doesn't work that way. You have to create a base for your things to be fixed moving forward, right? So these are this is how this works too. So if your pillars are not strong enough, your base is not strong enough, anything that you build upon it is going to crumble one day. So these are really key issues here. And then so once this is done, then of course you can build good financials, good reporting, good numbers. And then so of course I'm going to look at I'm give you solutions, but let's talk about what I'm talking about. Let's see what I'm talking about here. So I'm looking at, look, inaccurate finance prior month. So what we're talking about is, hey, I mean, total income went up, but your wages went up 138,000. There's no way, and then you have a loss situation of 129,000. Where in comparison, look at this, right? So now we're talking about, hey, there's something going on here. I can see this is your income for October. November has a problem, and December has a bigger problem. Things don't, if I just look at this, things doesn't make sense. And then why this is happening, we need to figure this out. Right? We need to figure this out. So let me see, and this is one of the keys. This is your profit and loss statement. So we need to go back and look at your banking transactions here. We need to make sure that are the transactions in the system, in your accounting system, complete. Because we know in the bank that they are there, but are they in your books? Right? If they're in your books, then there's a classification problem. So if there's a classification problem, is this happening only this month, or has this been happening for last 12 months or forever? And if it's happening forever, why this is happening forever? This could be, one reason could be that when you're adding transactions to your software, which could be again QuickBooks or Xero, you have rules set up and the rules are wrong. And what is happening is they're adding the transaction to your software, to your accounting or your bookkeeping software. And because of the rules, they're adding it to the wrong accounts. And then so when this is off, everything else is off too. Let's say, for example, you're paying. This is an expense coming out, and you're paying. This could be a liability, right? So, but because of the rules, it's classifying this as an expense, and then that liability should be on the balance sheet. So these are all the things that we got to go back. Your base, your pillars, make sure that these needs to be they need to be fixed, right? And then so again, why they're off, finding out when your starting balances are wrong, and then how this needs to be fixed. So some of the solutions could be your bank rules are wrong, or the way the transactions are being entered are wrong, or again, person who's doing the work doesn't know what they're doing. Simple. Let's talk about second problem, right? Second problem is that your disorganized AR, which is account receivable, accounts payable, payroll, and inventory ledgers. And the certain ledgers are too messy to correct, and sometimes this happens. These are balance sheet accounts, majority of them, and then so they've been wrong forever. And how do you fix them? How do you fix forever wrong accounts? We have to start somewhere. We start this year, we start last year, we start 2 years before, we start 3 years before. We gotta pick a time and say this is where we'll be fixing stuff, right? We gotta look at your tax returns. You gotta make sure you look at your returns, that what you have reported. And then if you have not reported, of course, then we have time to even go back further in terms of fixing. So again, pick a point where you say we want things to be fixed. And moving forward, this is how we'll be fixing it. It could be 2 years, it could be this year, it could be last year, or it could be 3 years back. Based on what you have reported, how the documents look, what kind of the documentation is there available, because sometimes you're not able to find stuff 2 years back, 3 years back. So we got to look at all that stuff. So again, the goal is to establish fresh, accurate, dependable account balances. These are the pillars. Again, when I'm talking about pillars and the foundation, if they're not strong enough, everything that you build upon will not be strong. So, and then the solution is to reconstruct or recreate these ledgers from a verified source documents, right? That means that we are, again, documentation, what kind of evidence you have you filed tax returns, what kind of statements are available, credit card, loans, banks, if you're taking a loan from somebody, if you have a contract, what are the documents available, and how far can you go back? How reliable is the data? So the solution is to reconstruct and recreate from the verified source documents, because the reason we have to use verified source documents is because you'll be submitting this information to the IRS, right? In case of an audit, how are you going to prove these numbers? So we got to have a source. We got to know. So there are things that happen within the books, and there are things that happen outside of books. And what do I mean by that? So when a transaction is happening through a credit card, through a bank statement, through your bank account, these are all happening within your system. Now, for example, you take cash out and then from a bank account, and you give cash to other people. You buy stuff with cash. You buy equipment with cash, with inventory. There's no problem buying anything with cash, as long as we have receipts and we are able to book it into our system. A lot of people get scared with cash, but as long as you have paperwork behind that cash, you have no problem. So that's another thing too, right? People get scared. Hey, oh, what am I going to do? How am I going to do it? As long as you have paperwork, cash is okay to spend. And then so what we're talking about is again, the pillars is that, look at this. I mean, your AR is in negative. That's account receivable, meaning that you need to collect. So how can your AR be negative? That means have you over collected? So you're invoicing less and you're collecting more. There's something wrong here. There is something wrong here, because there's no way that you'll be collecting more and invoicing less, right? So we got to figure out why this is happening. This could be that the money is coming in, but no invoices are being created, or invoices are being created, but they're under created, and then so there's more money coming in than the invoices that you have in the system. So we need to fix this. Inventory. You cannot sell what you don't have. So that means inventory needs to be fixed. When do you start fixing? Of course, we got to find out. We got to go into detail. Does this happen in 2025? Does this happen in 2024, 2023? How far is this inventory being negative? We got to look at the tax returns. We got to look at your documents. Let's talk about accounts payable. Same thing. money that we need to pay out to our vendors. It could be to our, to probably refunds in any of those cases, cannot be negative. That means we have paid more. And then it could be we're, once this happens, that means we're missing on deductions. And this could be a reason. We're missing on deductions. We're losing that $577. Every dollar counts. And when I say every dollar counts, because this can add up pretty quick. Wage payable. Look at this, minus 20,000. There's wage payable is, it's the money that you owe. This is if somebody paid it out and it's a negative account, that means your expense, your profit and loss statement is wrong. You haven't recorded an expense properly. So all this negative account tells me that your profit and loss is wrong. This is what it's telling me. I'm sorry. This is what it's telling me. It's telling me your profit and loss is wrong. And when your profit and loss now, that could be that your income is higher. Income is higher. I can see. I already told you the deductions are missing. That definitely means your income is higher. So we need to go back and trace it. We can see this was positive in November. So something happened in December for this case. So that means we need to go back. What created this negative amount? And then this has been going on for some time, I can tell. That means we have a back problem. It could be 2025 problem, could be 2024 problem. We need to trace this too, and then find the source of the problem and fix it from there on. All right. So this is all for the pillars, the base that we are trying to fix. Once this is fixed, then we've built upon it. All right. So let's move to number 3. Missing, duplicate, and incorrectly posted transactions. Missing or wrongly classified transactions, duplicate, and posting error distorted results. So this is something that happens quite a bit, where you're pulling transactions from the bank account. Not everything pulls in, or you add double transactions. So you add one time, you add another time, and so software does it twice. Now you have double reporting, right? And then so what it does, it gives you a wrong picture of the numbers. So that happens quite a bit too. We have seen this happen many times. When we're doing a lot of cleanups, we see a lot of duplicates. We see a lot of incorrectly classified transactions, or we see a lot of missing transactions too. So many times we've seen where the bank is connected all the time with your software, but somehow, this is technology, somehow some transaction get missed. And then this happens with credit cards too, especially when there's a lot of transactions happening in a month. You're bound to miss transactions, and which creates, again, missing transaction creates missed opportunities for expenses, for deductions. That means more income. The more you miss, the more income you gets higher. So what is ensure it's a true, complete finance picture? That's the goal here, right? We want to make sure we capture every transaction within the system and from outside of the system. And so things happen within the system and things happen outside of the system, and you got to capture both of them to make sure your financial picture is accurate. Again, the solution is to identify, clean up duplicates, re-enter missing items, and correct misposted transactions. That's the solution here. All right. So we have an example here. For example would be that an homeowner is paying $129,800 for his home renovation, and we have it booked in wages and salaries. So this is, both of these transactions are wrongly classified as wages, and then this needs to be fixed. What it's doing is that this is making your profit loss go, your profit go down, but in a wrong manner. And these transactions needs to be reclassified, posted correctly, and make sure they go to the right account. Number 4, opening balances are wrong. This is what I'm talking about in terms of bank statements, leading to continuous mismatch. This happens when continuous deletion, you delete transactions. 5 months ago, 6 months ago, something happens that should have been there. The real transaction was something else. you put in a plug number just to make sure that that month goes by, and next thing you know, that was the wrong thing to do. And now you find this out after 5 months. So what you do normally in cases, what I've seen is what bookkeepers do is that they will go back and delete them. And as soon as you delete them, then every month gets off. So your opening balances are off now, whatever the transaction that was deleted with. So prevent. So how do you prevent this? Is to make sure that you book it right. And then let's say, for example, if you do find a transaction that should have not been have been posted, and now it's, that amount should have been there, is to fix it in this month, not that month. And there are many ways to do that, right? So we validate, reset opening balances. There's a way to reset them in the software too, and make sure that we get the corrected balances moving forward. And then so this is let's say, for example, again, right here, December 31, 34. This was office equipment was 5651 in negative, and 2025 is less in negative. That means they purchase items, and when they added that item to the balance sheet, the amount went down. But something happened here. We don't know. Income tax payable, same thing. Wages, same thing. And so these are things that we have to look at. And then so when we're doing cleanup, it's just not, hey, look at this and then fix it. No, there's a lot that goes on at the back end. Because what we're trying to do is we're not only trying to do cleanup, we're trying to set, make sure the base is okay. We're trying to make sure the pillars are okay, where you can have good financials moving forward. And that takes time because there's a lot to find out, a lot of tracing, going back and figuring out what really happened, and then fixing those problems as your business requires. In some cases, every business is different, so things will be different for each business. That's another point too, right? Not everything is applicable to everybody in the same manner. Things will be different. All right, so opening balances must be fixed. Let's talk about now. The first phase is over. Let's talk about how to handle the phase two. What do you need to check, right? I mean, that's the phase two. What do you need to keep on checking to make sure things on the pillar side, on the base side, doesn't happen again? Again, errors keep appearing. You don't know when they started, right? So isolate the root issue. So again, when I say isolate, this could be the bank feed issue, right? Where you're banking, your banking sends information or transaction to your software. The software is pulling those transactions, and then in the software we have rules, which are wrong rules. And so the rules keep on classifying those transactions in a manner that is wrong. Somehow it happened in some period 6 months ago, 1 year ago. Nobody looked at it, and it kept on happening. So now the root of the problem is that you have to go back and fix the rules of those transactions. When the money's coming in, if it's coming in from a certain place, how it needs to be classified, how it needs to be renamed, and what our account needs to be going to. So that's the root of the problem. And this is where you need to go find out why this is happening. Even though I fixed it now, it happened again the next month, right? So that means the root of the problem was never fixed. And then this is what I'm talking about in terms of the bank rules. And this applies to many different other accounts. Trace back the first one where the interest is for superior. Tracing. I keep on repeating certain things because this is applicable to majority of the solutions. All right, so that's number two. Number two is numbers can be verified due to missing and incomplete documents. So again, we gotta make sure we create fully supported audit-ready financial reports. That's the key here. When we're doing accounting, or when you're doing accounting, or when you're doing bookkeeping, the whole purpose is that when an audit happens, you don't lose sleep over it. This is the way you should be doing stuff. This is the way you should be doing your bookkeeping. This is the way you should be doing your accounting. Is when audit happens, you don't lose sleep over it. All you do is you go there, you go to the software, print all the reports, hand it over to the auditor, and then you go back to your normal life. Because things are okay. Things are properly classified. How things were done. And then you don't have to worry about audit popping up. You don't have to worry about auditor. If the auditors have questions, everything is right in front of them. The ledger, the reports, the details, everything is there. And that's the way your accounting or your bookkeeping should be. It should be audit ready. It should be audit ready. And that's the way we do stuff. That's the way we strive to do stuff. Make sure when audit happens, every transaction is accounted for, can be traced, can be looked at, and then we can satisfy the auditor. That's the way the bookkeeping and accounting should be done, right? And then where at any time in the future, if there's someone asking for information, boom, it's right there. Go and print. That's all you got to do. But you got to put in the work behind it. You got to make sure that things are okay. Right. So that's so solution is to match, make sure all supporting the information is there. Whenever you're also rebuilding, make sure that that is there too. It's very important. Again, this is, I think I've already covered this, mapping issues, software sync issues. This is where, again, mapping and then the rules, posting rules. This is where this comes in. I've covered this many times. We got to make sure that when, the root problem needs to be figured out. And this is how that is done. Right. So, and then look, if you have accounts which are suspense accounts, majority of times, sometimes QuickBooks are creating, this is just an account where money is being held for different reasons. This could be a payroll liability account where money needs to be paid in future, or money will come out of the future. Those suspense accounts needs to be cleared out. I've seen many times where the suspense accounts are just sitting there and now have like hundreds of thousands and millions of dollars, and nobody cleared them out. It's unexplainable. Things are just popping in there, and then no one is tracing them, figuring out what needs to happen. We need to eliminate them, make sure we only keep accounts that we need to report. If something needs to be tracked in a different way, yes, we can track it, no problem. But your reports should look clean. It should be to be accurate. If something we can off the books, we can track those. All right. So look at here. I mean, that's an example that we're talking about where clearing accounts are still there, and the adjustments are there too. And then this is this needs to be cleared out. This cannot stay there. And majority are liabilities accounts. That's the majority of liabilities accounts when I talk about clearing accounts. All right, phase 3, we're done with number 1. The immediate fixes where things need to be fixed right away. Then we have to figure out that, okay, what are the root causes of those problems, and then fix those root problems too, right? Combine both of them and work together. And number 3 is to make adjustments. Of course, misclassification and record entities are, they're screening financials, align financials with actual business activity, depending upon each business. That's another 2. Apply detailed adjusting entries. So when we say adjusting entries, these are one-time entries. This is not like something you do every month. Okay, but there are monthly entries too, but those are for other reasons. When we are cleaning up or we are fixing QuickBooks past errors, these are one-time adjustments we're talking about. This is not something you'll be doing every month. This is one-time adjustment. So make sure that this is you keep that in mind. You're not fixing your books to keep on repeating the same mistakes, keep on making the same entries. You're fixing your books so these don't happen again. Things don't happen again. This is the reason you're fixing, right? Again, transactions are sitting under wrong account categories. I mean, so that means the classification is an issue. Transactions are there, but they are in the wrong account, right? So that that needs to be reclassified. So that gives you half of the picture. You're okay. Hey, you know what? I have captured the transaction, but I have not properly classified them, right? So we have to reclassify the transactions to the correct account, right? These are all the processes. So again, the first process was to fix the immediate issues. Number 2 was to find the root problems. And then number 3 is we are making adjustments based on the solution that we have discussed. Some are one-time entries, adjusting entries, and then some are just reclassification issues. And then so this is what we're discussing here. And then once we are done with that, then we can update your your accounts payable, accounts receivable, bank reconciliation, credit card reconciliation, your loan reconciliation, your liabilities reconciliation. All those can now be done. Right? We reconcile everything. Once we have fixed the issues, found the root problem, did the adjustments, and then now we can start reconciling. That means, now our financials are looking in a better picture, in a better form, which I love. I love see, I love looking at good financials, and then I love fixing them too. I mean, this is something that I love doing, and then this is it gives me joy. I'm kidding. All right, so post adjustment financial review. So this is the fourth part. So once we have made the adjustments, we have made sure it looks beautiful, the reports are clean, and they make sense, everything connects. Then we gotta find out what how things are happening. Again, update. Make sure these are all part of the adjustment process. We update the AR balances, update the payments, make sure we look at the invoices. Again, if the AR is wrong, AP is wrong, why are they wrong? Where how is the invoicing process going? How is the vendor payments going? Who puts them in? Who creates those invoices? Who collects the payments? Who records the payments in the books? And then who deposits them? This is all the process that needs to be looked at. And then that's the reason that a lot of mismatch happens too, right? So one person is doing half of the job, the other person half the job. They don't know, they're not talking to each other, and then it's just one mess after another. So even sometimes what happens is you think you have fixed certain issues, and you think you have found the root problem, and what happens is that the problem pops up again. Why this happens is that majority time, if the problem is popping up, that means the process could be wrong, and that could be a reason too, where how things are being entered into QuickBooks, even though we have fixed everything, but the process is creating a problem. Not the actual transaction, not the actual software, but the process itself is creating problems. So we this is something we have to look at too. If a company is doing it, why they're doing it, and how they're doing it, right? So again, once we're done with this, we make sure we have control checks. I think I've discussed this previously too. In control checks, we got to make sure that who's doing the bookkeeping, then why the problems don't happen again. Uh, Make sure once we fix them, you review them on monthly basis. You look at the things on monthly basis, and then implement review cycles. Right, talk to your team, talk within yourself, talk to a CPA, talk to an accountant, if they can review things for you. Right, make sure you have a third eye, a second eye. Normally what I would do is, once we're done, we will look at it again after a month. We will look at it again after a quarter, and then we'll do a 6 months review. In this way, we know that things are working fine. So month, quarter, and then 6 months review. All right. This whole process, implementation of approval for transaction, is a process problem. This is what we're talking about, the workflows. Make sure that your workflow is efficient. If your workflow is not efficient, it's not following the correct method, the problems will keep on popping. Things must be done in the process on a timely basis, as discussed. And if things are back and forth on a timely basis, your financials will be off too. So if one person is working once a month, the other person is working twice a month, things won't match the same way, right? If they're working in different times too. So we gotta let the process play out, and it might take 2 months. And that's too long for a medium-sized company. That's too long for things to be fixed, to be figured out. All right. So again, permission problems too, right? Too many people have access to the QuickBooks. Everyone is doing something, looking at something, accidentally doing something. So make sure when you give access to people, they're limited in terms of what they can do, how they can work on the financials, what part of the books they can work on, and then so nothing gets affected overall, right? This is an important, and so role-based access and permissions, something that we have to look at. All right. So again, automate monitoring of unusual and duplicate entries. That means errors go unnoticed until reporting time. That means no review cycle. I mean, if there's no review, you won't be able to find things for years. So and then that's a problem because you're giving financials to your accountant, to your CPA to do the returns, and next thing you know, things are just out of control. So make sure you have a review process. Make sure even if it's quarterly, even if it's every 6 months, make sure you have it. I won't go beyond that. I will have it quarterly or 6 months, so you can, find mistakes, catch mistakes before time, fix them, and then so once you're able to fix them, you can see the proper statements, you can see the proper numbers, so you can do planning, do tax savings, right? So otherwise we are playing catch up. Again, the reason we're doing cleanup, we're identifying all these issues are that we do it one time. You don't want this to do it. You don't want to do it again and again and again. It's costing you a lot of money, a lot of time, a lot of resources, which is just waste. This is just waste. And then this could be because of the personnel. This could be the process, or this could be the software itself. Or sometimes things are just behind for reasons that are out of control. It's okay, but once you do fix them, it does not need to happen again, right? So, some of the examples here again, we're talking about the same thing. We have discussed this. Is duplicate errors notice. Look at reviews every quarterly. Look at what do a comparison of times. This is the comparison of 3 months, a quarter, and then we can see how October looks. We can see how November looks. We can see how December looks. And then if you want to identify a problem, look in terms of a computer equipment, you can see where the problem started, right? You can see it's between October and November. So now we need to go back there, fix it. We can see this problem has been going up for some time, inventories and pre-made. This is a good, something happened in November, and now this needs to be fixed. So once you do reporting on monthly basis or on quarterly basis, you can see where you can trace where the problem is happening and fix it. And this problem has been going on for a long time. Wages and payable 20,000. I can see for 3 months. I need to go back to the next quarter. If it still shows, then go back another year, see if it still shows, and fix from there on. All right. So look, I mean, we went through a lot of stuff when it comes to QuickBooks cleanup, or when it comes to bookkeeping cleanup, when it comes to zero cleanup. A lot of catch up, a lot of things going to clean up too. And then we talked about how your pillars should be strong, your base should be strong. This comes to your balances, your accounts, your chart of accounts, your process, and those are the base. And once those are fixed, then everything from there on can be built and then can be in a proper way. Of course, we can help you with a lot of this stuff. We can help you with cleanup. We can help you with reviews, quarterly reviews of your bookkeeping or your accounting. We can help you on monthly basis too. Shoot us an email, info@akifcpa.com. Let us know what your issues are. We'll be helping to help you. We have a great team here with a lot of people with a lot of competency that can really do the work. Read about us. Again, shoot us an email, info@akifcpa.com, and then we'll look forward to talking to you. Thank you. Bye-bye.